Okay, this is a quick video on drawing trend lines and the significance of the trend lines for support and resistance. As you know, in TurboTrading here, I only use a couple of patterns or indicators to trade stocks. The main ones being support and resistance levels, trend lines, and then the moving averages. But the moving averages are more on the daily chart, the 50 moving and the 20 moving. And these are lagging indicators, so I just use them more for direction of the market or to see if there is a change in direction. But somebody asked me the question, they were saying that stock had traded up through a declining tops line, and should we be looking to trade this? The thing about trend lines, and we'll call that in a general form, we'll call horizontal lines and angle lines all trend lines. The thing about trend lines is, the key point is that you have to draw them in the same place the rest of the world is drawing them. Otherwise, there's no relevance to them. For instance, let's say I drew a line in here. I thought, geez, this is support for the stock in here. And it just went through it like a hot knife through hash. It's, sold off so sharply. And you think, well, isn't that support? No, because nobody else in the world is drawing their line there. Or some people might because they thought that was a top. But in general, that's, there's not going to be many people drawing their lines there. Therefore, nobody else except you believes that that's a support level or a resistance level, as the case may be. Now, I drew a line here because we did get some support. But when it got down, and it did get down to it and bounced back up, but it just continued on because the selling pressure was so great. Any kind of support didn't help. Then we drew a line in here. This was the resistance area for these stocks here, here, and here. You see, and then it popped through it. And so I extended that line here. And now it's not an exact science. We did see that they did spike down through the support level, but it did hold. Why? Well, because this was the pre-market level, and it was a pre-market level. This resistance in here all gave this some support here, and you can see again. Here's the support again. So I'm not the only person that drew this line in here. For support and then to come in to buy the stock. Now the other point is the channel lines that we trade. Typically, or I'd say statistically, the rising or the channel lines are not as strong of support and resistance as the horizontal support and resistance lines. The channel lines are great because you can see, it gives good direction, it shows great visualization on where the stock is going. But we see that we joined a dot here, and a dot here. But when this stock broke up through this resistance level here, pulled back, came back, held support, allowed us to draw the trend line. It held support on the support line. So when it pulled back here and held, did it hold the trend line or did it hold the support line, the lateral support line? Well, I'm going to argue that it was both, actually. The combination of these two points, intersection with each other, gave it a strong support level. It pulled back, traded off the 50, traded off the trend line, traded off lateral support. There was 3 or 4 reasons why this stock bounced. Sure enough, off it went. Now, it did get up to the top of the trend line, and when it did, there wasn't any other sort of resistance level for it, so you had to rely on the trend line, and everybody was. And sure enough, you get this candle, the doji candle, star. Next candle's red, you need to get out of the trade. We saw then that it broke down, it held on the trend line, but when we drew this triangle patterns, which is just the intersection of a declining channel and a rising channel. When it got to the apex of that channel, I said, okay, this is either going to pop or drop. And sure enough, it dropped. But it dropped, where did it drop? Did it drop at the trend line or did it drop at lateral support? Well, I'm going to argue again that it was the combination of these three patterns, the apex, the wedge, lateral resistance, and the declining tops line resistance that forced this, that didn't force it. All the other traders who were watching this, especially those that were shorting stocks or had a long position, went, oops, we need to get out of this because there's massive overhead resistance for this stock with these support and trend lines. And sure enough, off it came, sold down. But it did sell down to the support line. You can see here, this is big support for it. Popped down, tried again, held, and now trading back up. So the rising or falling trend lines in of themselves are not as strong as a lateral, a horizontal trend line by itself. Where you get stronger support resistance is when all of the stars align. The 50 period here, the trading, the trend line, the horizontal lateral support, when they all converge, then that's much stronger than the single line in of itself. But so in terms of support, the weakest in relative terms are rising or falling channel line, lateral horizontal lines, and then the mixture of the lines are the most, or give you the best support resistance type patterns.